Nu ska vi lyssna lite på iGaming. Vi har ett nytt företag på scen här och det är GiG Software och deras CFO Phil Richards. Welcome Phil. Please get started and I will come back with a few questions.
Tack. Hej allihopa. Ursäkta för engelska, men min svenska är inte så bra. Men ursäkta, men lovely to be here. Thank you. Thank you for letting me present. Very excited to talk to you about the opportunity of GiG Software PLC and talk a little bit about that, the market positioning and some of our recent financials. So as I mentioned, the agenda. So I'm going to talk a bit about GiG, the background, what the market is that we're in and the growth potential in that, where we're positioned within the market, our investor value proposition. Then I'll talk about our recent financial performance, which is based on our Q1 results we published to the market, and then give an update on strategic progress and outlook for 2025 as well. So if we talk a little about who we are. So we recently listed on the First North Stock Exchange. We listed in the end of September last year, having split from a previously larger company where the other half was a gaming media affiliate business called Gen2 Media that's also listed. So we've been around since 2012, but as a standalone business within the iGaming and sportsbook sector, we have been there since September of last year. We have about 70 brands worldwide. You can see all the flags of all the different countries that we're in currently, and I'll talk a bit more about our total addressable market in a few slides' time. We're compliant in about 29 different markets now, with over 80% of our GGR generated from regulated markets as well. We have offices across Europe. Our main office is in Malta. We have offices in Spain and in France, and myself and a few other people are also based out of the UK as well. So if I talk now about what do we actually do? So we have 4 key products that we sell to the market. Underpinning everything is our platform called CoreX, which is an extremely powerful iGaming platform that provides player account management to operators globally, and that is based upon a revenue share with our operators, underpinned by a minimum revenue guarantee. On top of that, we have SportX, which is our sportsbook solution, which we provide across the globe again, across our 29 different jurisdictions. And this is an extremely revolutionary sportsbook, specifically tailored to your localized strategy also. We have DataX and LogicX. These wrap around everything we do, and these enable our operators to really make a bespoke customer experience, help them with player acquisition, player retention, and the entire player journey. And then we have SweepX, which is our latest vertical, which is our product in the sweepstakes market that we went live with earlier on in the year in the US with a company called Primero, and there are many more companies we're lined up to go live with throughout the year as well. And this pyramid here showing how they build upon each other to offer a full turnkey solution and end-to-end service provision within the iGaming space. So what does the market look like? So currently the market's estimated to be about 138 billion globally, of which we estimate 50 billion to be our total addressable market. We estimate this will go up by 50% to 76 billion by 2027, and the total market to be around about 230 billion by 2028. So why is there going to be so much growth? Well, if you think about the markets, yes, okay, here in Sweden it's quite a mature market, the UK is quite mature, but there are so many markets yet to regulate that we will be regulating in the short, near, mid and long-term future as well. And we're well poised to take in all of these. You know, we're live in over 20, getting compliant in 29 different markets, and that's only ever expanding as well. We recently launched in the Philippines, which is a fantastic market for us, and really there's a lot of untapped potential out there that we think contributes towards our total addressable market. So as you can see, just some statistics about where the markets are. Europe is obviously the largest, however, North America catching up rapidly, Asia will catch up extremely rapidly as well. And predominantly this is, betting is about 50% of the gross win per vertical, and then you've got gaming next, and lottery is a smaller percentage of that as well. So where are we live? What market penetration do we have? So we're live across the globe. We have Canada, US, Peru. We've also got Argentina, Spain, France, Croatia. We have a lot of different markets that we're live in currently, and we have good market share in a lot of them. Spain's an extremely attractive market for us. We have just under 10% of the market share in Spain, 16% of the market share in Argentina, just under 10% of the market share in Peru. So we are really a global business with deep penetration in these markets, and it's a real USP for us at how many markets we're in and how many markets we can go in and how quickly we can go into them as well. So where are we positioned compared to our competitors? So the great thing about GiG is we offer this full turnkey solution. A lot of our competitors either do sportsbook or they do the platform. Rarely do they do both, and rarely do they do both within the regulated market sector. So we sit there nicely in the middle. We've got this very wide market access. We've got an excellent sportsbook and a top-of-the-range platform business as well, and we provide the full end-to-end service with the data and Logic X that I talked about previously, underpinning this as well. And so we're extremely well positioned to capture growth, to grow both with our existing partners and with future prospects and when future markets come online as well. So what's our investor value proposition? Well, we have a very high growth revenue model. I'll talk a little bit about our 2025 guidance a little bit later on. Got current ARRs of about 35 million. Got a best-in-class technology and product offering, extremely strong market position, penetration and expansion potential. And we have a very experienced leadership team. You know, I'm delighted to be part of such a strong leadership team with a very, very strong track record in the iGaming sector. And we're a very scalable business. This is a business that, I'll talk a bit more about this, but we don't need to raise the cost base to achieve our 40% revenue growth and beyond that as well. So all of this will drop down through to the bottom line into profitability and cash generation. So what do our recent financials look like? So just some key highlights from the start of the year. 10% year-on-year revenue growth to 9.1 million at the end of Q1. Adjusted EBITDA went up by 1.2 million. So you can see that that really is that drop through that I was talking about. The cost base actually decreasing whilst revenues are increasing. And this is extremely exciting for us. You know, we have a mature cost base that can support massive growth. We signed 9 new commercial deals during Q1. And we launched 4 new brands, and we've got extremely ambitious and exciting plans for brand launches going through to the end of the year as well. We've initiated a technical consolidation to further streamline our cost base, and we have a very healthy cash position. You know, we finished just shy of 5 million. However, there was the news yesterday that some of you may have seen that we did a directed share issue yesterday for an additional 4.7 million. So we have an extremely strong balance sheet, which will support our growth and support our future plans also. So just a quick look at the financial summary. As you can see, the quarter-on-quarter revenue growth and our cost base decreasing as well, which is dropping through nicely to our EBITDA line. So what's driving the revenue growth? Predominantly, the revenue growth is driven by new customer launches and existing customer growth. I'm delighted at how well our existing customers have been growing, and we continue to see this going forward, and they grow both within their own markets and launching additional markets with them as well. For example, Betson last year, we launched in Peru, and we expect to do more market launches with them also. And this is how we like our customers, is to both grow within their existing and see if they want to take on additional markets as well, along with the new launches we've done and the 4 that we launched at the beginning of this year, as I spoke about previously. So what about OpEx? Well, we're a SaaS business. You know, predominantly this is underpinned by our people. So people is our biggest cost. However, there's something that I'm always focusing on, making sure that we're optimizing on cost, making sure that our cost base isn't growing whilst the top line is as well. So I'm pleased to see that this cost trend is declining, and it's been pretty stable year on year as well. So where does this all translate down through to the bottom line? So we had the revenue increase, 0.8 million. We have the cost decrease as well. And then we have an additional lower COGS as well. And this all brings us through to the 1.2 million increase in EBITDA year on year. And very importantly, what does that mean for our cash flow in our business? Historically, this business has been one that's had quite significant cash outflows. This is something I'm actively managing down. And I'm really pleased to say that we've made significant progress in this, so much so that we should be targeting cash flow positivity by the end of Q3, early Q4 this year as well. We've got a very strong balance sheet, as I mentioned, and this directed share issue is only helping that further also. So what about our strategy? What are our key strategic pillars that we're working towards? So we have 4 key strategic pillars here. One of them, in enhancing our technology and product offering, that's making sure that we have the next generation platform, the top of the range platform in CoreX, and helping people with their CRM, customer retention tools, managed services, and everything that goes around that ecosystem as well. We continue to improve on operational execution and delivery, through ensuring that our tech stack is the most up-to-date as possibly could be, streamlining the delivery process and stripping out costs where we can, while still maintaining delivery of a best-in-class service as well. We're looking at new markets, expansion, focus on profit, targeting high growth, newly regulated and already licensed markets. Key focus on Europe, LATAM, Philippines and Canada. And these will be underpinning our growth in 2025 and beyond. And looking at new business growth, we had a really successful ICE in Barcelona at the beginning of the year. The pipeline quantity and quality continues to grow as well. And we signed 9 new agreements during Q1 also. So what about the launches? How are we going to get this growth? So this is all about new partner launches. We've got extremely ambitious plans for our launches throughout the year. As you can see, we're expecting to launch over 20 in 2025 alone. And this is on a long-term basis. Our contract lengths are typically 3 to 5 years. There's revenue share underpinned by minimum revenue guarantees and fixed fees on top of that. So I have very, very good visibility over 25, 26 and 27 already today, thanks to the way that the contracts are structured and thanks to the fact that we've already signed most of these commercial agreements. We have extremely ambitious plans for launches through to the rest of the year as well. And these are in high growth and very profitable markets also. So what about the sales pipeline? How is that looking? So currently, at the end of Q1, we had about 20 million of contracted new partner pipeline, and that's measured on an annual basis. So that's our annual value of the contract as it is, and that's quite a conservative number because predominantly that takes in just the minimum revenues, not the upside on the revenue share as well. So how does that look for 2025? If I then go and look at the overall picture and say, okay, how am I building up to the 44 million that we've guided the market? So we've guided the market on a 40% revenue growth year on year, 10 million EBITDA by the end of the year also. And where's that coming from? It's coming predominantly from these new customer launches. So those ones I talked about in Q1, the ones we're doing in Q2 and Q3 as well. We've got existing customer growth, which is looking really strong throughout. We also have one-off setup fees, which is an indication of the quality and the quantity of the pipeline. When they continue to grow, that means we're signing more and more new deals as well. And this then bridges us up to the 44 million that we've been guiding the market to. And I'm delighted that we've already secured around about 87% of this revenue already contracted in. You know, for us, it's all about having long-term partnerships underpinned by a good revenue growth and the ARR that's associated with that as well. So it's a super exciting year. 2026 will be even more exciting because then you'll see the full impact of all of these customer launches that we have during 2025 coming through to 2026 and beyond. So in summary, very strong start to the year, great momentum coming into Q2 as well. Really, really encouraging to see the growth across all of our key markets and product verticals as well. Really great to see the sales team closing 9 deals during the quarter as well. We completed 4 partner launches and we're on track to deliver our guidance of 44 million revenue and EBITDA of 10 million. And I'm delighted to be confident of our future growth prospects and you know, really excited about the future that this will bring. You know, it's been a great start to the year and looking forward to continue on to that. And with that, I will finish up and open up to questions.
Thank you very much. I start off something a little bit about. I mean, it seems to be quite a lot of partners, right, on the sales side. And are there any bottlenecks there? Is this something we should expect going forward, that you can work with this many, or can you expand, or could you give some flavor on that?
Yeah, it is quite a few launches we're planning to do this year. That is quite a high number, but we've got, you know, for us, it's very dependent on where we're launching as to how quickly we can go in. Some of them are market packages, some of them more bespoke, so it depends on that, whether we can do more or less, but it's definitely a manageable size. I like to see the pipeline continues to grow, travel through, and I certainly don't foresee any bottlenecks at the moment for us in delivering these launches when we need to. You know, sometimes they may slip by a week or two or a month or so, but that's predominantly maybe due to the regulator or some additional work that needs doing, but there shouldn't be any bottlenecks that I foresee.
Yeah. You raised some money recently, I think 4 million euros or something like that. What do you intend to do with that money?
So there's quite a few strategic opportunities we're looking at, but it's also worth noting that when we go into a lot of RFPs, these are big companies we're bidding for, and they want to make sure that the partners they're working with have a very strong balance sheet, that are well capitalized. So this will enable us to be even more competitive in some of these RFPs to make sure that we can start winning these customers. So for me, it's a combination between strategic opportunity investment and also making sure that we're well capitalized so that we can be competitive in all of these pitches.
Yeah, I understand. So as an RFP, you need to have a strong balance sheet to be able to take the customer, right?
Exactly.
Yeah. Acquisitions, you didn't mention that. Is that something you look at?
I think, to be honest, in my personal opinion, I think that'll be a bit of a distraction for this year. We've got such a good growth potential just organically with what we're looking to do. The M&A is something that, we've got so much to deliver on this year. That's something that I think, maybe in the future that comes in our plans, but 2025, we just focus on delivering with our current customers, the ones we've already signed, and getting them launched.
Another question I was thinking of, the competition landscape. How is that at the moment, do you think?
The competition landscape is, look, everything is a competitive process. However, we are actually really well placed. A couple of years ago, we were probably losing out on quite a few of these deals, but we're finding now we're going to RFPs and we're either winning them or coming a close second, which is fantastic. So we are getting much better. There is still competition out there, but given that we provide this full turnkey solution, which almost no one else does in this many markets, it's very, very hard to beat us when it comes to that. When it comes to the global footprint, there are very few people out there that are in as many regulated markets as we are.
Yeah, I understand. Back to regulation. I mean, this is constantly happening, right? How important is that for your services? That the market gets regulated?
Oh, it's super exciting for us because we've got such great experience about going into new regulated markets, and we have partners that really want to go and attack these newly regulated markets. So whenever a market's opening up for regulation, that's great for us. We can go in there, we can establish our customer base, we can build out the product quickly to meet the specifications. And it's just so exciting how many markets there are yet to regulate. In Europe, we kind of maybe a little bit more of a mature space, but there's so many more out there that are open for regulation.
Are there any important, if you're not into iGaming, or something we should look for when it comes to regulation, markets that might be of interest for you guys going forward?
Yeah, as I mentioned, the Philippines is a market which we're just entering into now, which is going to be a really exciting market. There's a few others in Asia that have been making noises. There's talk about Thailand regulating, for example, which could be interesting. There's other markets looking to, Finland looking to regulate as well. France maybe doing iCasino regulation also. So there's quite a few markets globally. Brazil just regulated recently. So there's quite a bit of movement in the regulated space, enough to certainly keep us on our toes.
Yeah, and that will enhance your growth, right?
100%, absolutely,
yeah. Are there any economic of scale when it comes to this? Global footprint sounds like a lot of different regulations, quite difficult market to monetize, so to say. Could you?
It is a bit of heavy lifting, but we've done most of it with the 29 we're in at the moment. So we can for sure handle 3 or 4 a year new markets to go into. There are economies of scale. Sometimes you have to build it a little bit more bespoke than others, depending on the specific regulations. However, underpinning it all is the same technology, right? It's just, we need to maybe have a data vault here or, something there and build out local infrastructure, but it's not huge outlay.
No. You had one part is to enhance your technology or to enhance your offering. How much do you need to invest to keep in touch with the market, to keep your products in the forefront, so to say?
So I would say it's more we need to keep at the same level of investment. We have quite a mature cost base. We have, in my opinion, really, really good staff that will be able to make sure that our product remains at the forefront. So I don't think we need any additional investment, but we do need to keep investing because you do need to make sure that your platform does, remain at the forefront of the technology and it moves quickly. If
you're not going to make acquisitions and you're a profitable company, Can we expect dividends going forward from you guys?
I'd like to start making some money first, then I can. Yeah. That'll be a nice problem to have when we talk about that.
Yeah, but still, I mean, you need you're looking to get on an EBITDA, profitable in EBITDA, not necessarily on like earnings per share or net profit, right?
No, I mean, I think, you know, for this year, our focus is on getting this 10 million EBITDA, you know, which will still be like basically after tax a loss. Yeah. However, next year, I want to start talking about profitability as the bottom line, right? Not EBITDA.
No, okay, I understand. And I mean, EBITDA should be quite close to the cash flow, so you will be cash flow positive, or?
So our target is cash flow positive by the end of Q3, Q4 this year, and then going on forwards, it should just be a monthly increase in the cash inflow.
Yeah. Okay. Thank you very much, Phil. I think this was it.
Thank you.